Good morning, this is Peggy from WAR. So today I am joined by Rob Antoniades. So Rob is the co-founder and general partner at Information Ventures Partner. So IVP invests in early stage fintech and enterprise SaaS across North America. So thank you so much for being with us today. That's great to have you.
Thanks, Peggy. Happy to do this.
Thank you. I am as well looking forward to hearing your thoughts. So let's start with the first question. So from your perspective, what would be some of the lasting impacts of COVID on the financial services industry?
I think financial services will go through a bit of a transformation here, as most industries will. They're no different. And I think what we've seen in some industries is an acceleration of what was coming. And I think financial services we have seen an acceleration of digitization as an example. We will see an acceleration of process automation. And these are things that were coming anyways, but because COVID created a dispersed workforce that needed adjustments, things needed to change. And process automation is a perfect example of that. How do you take the same processes that were physical, human in nature, and now automate them? And when you're doing that, you're revisiting not only what you've done in the past, but how you should be doing it going forward. So you may have had a 10 or 12-step process, which can now be condensed into 3 or 5 steps. And I think banks are forced to, and insurers to bring these efficiencies through those tactics. Think about other things. You've seen a rapid adoption of e-commerce. You've seen a rapid adoption of contactless payments. You've seen a rapid change in how the workforce is managed and remote working. So every element of a financial institution is now kind of being assessed to see what impact COVID has made to them and what they should be doing to improve it. And I think there's been a tremendous acceleration to those elements of the business.
Okay, and in terms of regulations, what we've seen in Canada is some changes, at least some suspension. For example, traders can now work from home because, otherwise it's not allowed. If I'm thinking a bit more long-term and more stable or parent regulations and changes in policies, what do you see might be these new changes?
Yeah, I think there will be changes to remote working. There's no doubt, but I don't know if those are regulatory changes. So in 2008, 2009, it was very simple. The financial institutions relied on taxpayer dollars, certainly in the US, to survive. And at that point, I think the regulators and the governments had every right to say, hey, you have to change the way you conduct business. And they looked at the obvious things, which is what are the high risk businesses that you're in? And I made it a condition that financial institutions stop engaging in those types of businesses, and that's why you saw Dodd-Frank, and that's why you saw the Volcker Rule being introduced. And but this is not 2008, 2009, and nobody could see the pandemic coming, and certainly not the impact that it has. And is there anything fundamentally wrong with the function of finance and banking and insurance? And the answer isn't as clear to me this time around as it was back then. And so I think what the regulators ought to be doing and are probably doing is working with the financial institutions to understand really how stable those organizations are.
Yeah.
Because at the end of the day, that's what they want to do, is they want to ensure the stability, promote the stability of the sector. So I'm sure they're working with the banks to understand credit quality and loan losses, and as they've asked the banks to defer credit card payments and mortgage payments to some of the consumers that were at risk, I think they're just working closer with the financial institutions, and I'm not sure that I can see how the regulatory environment will change. Certainly this is where boards of directors of banks get paid the big bucks. This is why they're there, is to ensure that management teams are doing the appropriate things and working with the regulators. And that's the governance and oversight that I would expect. So I think there's a lot that's happening, but I can't see what will change. So and so I just don't know is the answer to that.
You spoke about stability of financial institutions. If I go one level up and I look at the global financial order, obviously a lot of debt in the economies. You see some protectionism that is even more than pre-COVID level. What do you see this global financial order going in a world post-COVID?
Yeah, I think we have layered on a tremendous amount of debt onto sovereign debt. I think this country is a perfect example of that. Canada, of $1.3 trillion worth of debt. If you now look at the impact, and that's just at the federal level, you look at in our case, Ontario being the most indebted sub-sovereign in the world, and then you've got crown corporations like Hydro One that are incredibly indebted. I don't know how we get through this. But I think there's two obvious ways one deals with this issue. The first is to increase taxes. And there are some jurisdictions where I think that's possible, and there's others where it's less possible. And I don't think Canada, which is a relatively high tax jurisdiction, has a lot more room that it can raise taxes. So what's the second way of dealing with it? The second way of dealing with it is to inflate your way out of it.
Exactly.
And so which is I think something that is counter to what central bank policies have been around the world, which is to maintain inflation at a steady 2 to 3%.
Yeah.
And so all of a sudden what we're doing is we're changing, I think, the macroeconomic environment where maybe inflation is acceptable. And I think that has ramifications to financial services and financial institutions, and as well in their business models. High interest rate environments, are different business models than low interest rate environments. So I think we've seen, we're going to see that impact, and you layer onto that, I think the trade wars that are going on. This is not what I would consider healthy. Protectionism, as you talked about, is going to be counter, and I think it's counter to free trade. And so I think we've all benefited globally from the embracing of free trade. We've also seen the impact of that in COVID because of supply chain issues and things like that. But so there's a new world. There's a new leveling out or stability that's going to come out of this, and I think we're going to just have to adopt and to it. And we've lived through high inflation periods before, and I think we'll live through them again, but that's the easiest way I see ourselves out of what we've got.
Okay. And so in terms of resetting the competitive positioning within financial services, obviously it's a huge disruption we've been through in the last few months. It's going to continue, I think, for quite some time, not just the virus, but the aftermath of the virus. What do you think is going to be, maybe who will be the winners? Maybe you have some name of companies, but besides the ones in your portfolio, but who do you think is going to be the net winners, the net losers, maybe? How do you see that shaking up?
Yeah, so we certainly can identify sectors that have come out ahead. Telemedicine is a perfect example. Communication infrastructure is a perfect example. But I think there's a lot that will benefit from this. I think we've seen a spike in financial crime, and you should expect that during difficult periods. And anybody who is fighting financial crime, and banks are doing their piece, but they need technology, they need vendors to help them with that. I think we're going to see that. I think we're also going to see a bit of a shakeout in financial institutions themselves. And I think crises are a perfect opportunity for them to differentiate themselves from other financial institutions. For the most part, we sell the same products, or mortgages, life insurance, annuities, credit cards. So this is an opportunity for one to differentiate itself. So how do I deal with my client base today? And we talked a little bit earlier about them looking at credit quality, and they're looking at the loan losses, and they know which clients are in trouble, whether it's commercial or corporate or individual clients. They know that. And so how do you now work with them? This is an opportunity for you to build that trust and build your goodwill and brand in how you approach what you know. And so you could now, not only do you know who's in trouble, there isn't a predictive algorithm. I think that you just generally know, but now can you turn that to become a little bit more prescriptive? Can you take the information and help that individual or that organization work their way through this? And if you do that well, I think you differentiate yourself. And in venture capital, which is what we do, we have banks that provide debt to these companies that are all cash flow negative, based on certain assumptions. And the single most important element to picking a good bank to work with is how they work during the difficult periods, how they work with companies. And this is no different, but we just haven't seen it historically. If you missed your credit card payment, the first thing they do is they bring the hammer down. Yeah. Instead of actually working with the client to say, okay, you've missed this, hey, let's see how we can help. And I think this is an opportunity for them to differentiate themselves, and they certainly have the technology and they have the data. So I think we'll see what happens.
I think some of the mid-sized US banks have been very good at doing that, especially doling out the money, and they didn't have the same technology portals and the big banks were able to put in place, but they actively walked the phone the old way, and to your point, made sure they were helping their clients. To be honest with you, I haven't really heard that here in Canada, and maybe because organizations around are very large, so you don't know your clients maybe as well than in a small organization. But I agree with you, great opportunity to differentiate yourself with helping people in bad times, you know.
Yeah, I think they've all gone and accepted the fact that they are deferring mortgages and credit card payments and all that stuff. And so I think they're working through how they're going to do it, and we'll see what the ultimate answer is.
Yeah, exactly. Well, the question is timing. So it's the same thing. How long will it take for people to, if it takes 6 months for the bank to be ready to help me, I might not have 6 months of, cash flow. So it's
right. That's right. But from a financial institution's perspective, they have so many things to think about right now.
Trust me.
I mean, just look at the real estate portfolio that they have, the offices that they have, the branches that they have. That what are you going to do with all of these? How do you get the people back to work? How do you move? All the things that they have to deal with. It's incredible, and so I think there's a prioritization that's likely to happen here, and they're going to look for technologies and are going to look for solutions that have a quick payback. Things that can operate.
And that might be, I would say, the bright side of this crisis. To your point, the acceleration of the transformation using technology, but also this fact of really putting clients back in the center of everything we do, which I think sometimes has been forgotten. So hopefully that will come back. Staying in the topic of financial institutions, you work obviously with many financial institutions. You're very familiar with that. Where do you see the transformation really going? Obviously, they're accelerating what they were doing in terms of back office digitization, digital channels. Anything else? You talk a bit about cybersecurity. What do you see these next big chunks being?
Well, I think the biggest transformation here will be the overhaul and the digitization of a financial institution, and it really, I think this is a very good catalyst. When I think about banking, we become the branch. The branch will be in our pocket. The branch will be in our purses, and so that's the expectation. And certainly in an environment where people don't want to have physical contact, they don't want to handle money. That's what's going to happen. And so this is really the time when the strategy groups of the bank will have to do all that introspection to understand what the implications are and what it really means, because the customer wants to be treated differently. And so this is I think the biggest single impact that this will have, or COVID will have on it. And I think there's lots more. And when I look at the infrastructure of the bank, you've got call centers that are people centric. How do you now service the people in a different way? Because you can't bring hundreds of people, squeeze them all into 20 square feet and have them operate. How do you service the elderly clients? The banks have the disadvantage of having to be omni-channel. a fintech startup, a neobank doesn't have to be omni-channel. It can be completely digital. It can serve as a 25 and 35-year-old, and it can ignore the 85-year-old, but the banks aren't allowed to ignore the 85-year-olds. They still need branches in the communities. And so everything that they need to do is to engender trust with the greater community and their customers. And so how do we transform the institution to become digital without losing that service level that they have today? And I think it's going to be fascinating, and it's not going to be easy.
No, and you know, it's a good point. In the US, I was reading some regulators who gave strong messages to banks that they are not expecting to see any branch closure. So you see also the governmental aspect, to your point of, okay, well, we still need to help our communities, we still need to support all elderly people. So it puts financial institutions in a smaller box in terms of latitude and what they could do.
And I think one of the things that the banks here are going to do, at least in Canada, in my opinion, is they're going to kind of push back on open banking.
Oh, yeah.
They know it's coming, but the same expectation is true of Canadian banks, that they can't really go through mass branch closures. And they're being asked by the government to help the people transition by deferring these payments that we talked about earlier. And so, you know, the banks now have every right to say, and even the working groups and the task forces that are looking at open banking have kind of deferred, but they have every right to say, you know, we've helped you when you needed it.
Exactly.
You know, let's now make sure that when we do open banking, it's not if we do open banking, but when we do open banking, we do it right. And so let's take our time to do that. And I think they've earned that from the government. So it's now incumbent on the consumers to be pushing the agenda to say, hey, we want open banking. And so I you know, it's a fascinating time to be in financial services.
It is actually. It's I love finance, but it's even more exciting than always. And so, last question for you, a lighter question. So what did you change in the last few months? Did you pick up good habits? Do we have a new Rob 2.0?
Is drinking more a good habit?
But drinking more water is.
No, we're consuming more red wine than I think we ever have, but it's still very, very manageable. Now, I have been impressed by what COVID has done at a societal level, because I think people have really embraced the fact that they are part of a community. And sometimes we lose that, and we're all in it for ourselves, and especially in the big cities, we kind of lose that. And now you've had to say to yourself, that elderly person across the street can't get groceries. What can I do to help them? You know, how can I make a difference to the frontline workers? What are the things that we can do? And it's brought a bit of humanity back. And so I've really liked that. And it's made what it's done for me is it now makes me reflect on people, because this pandemic has created different reactions by people who I thought were very reasonable thinkers. And some have gone off the deep end and said, we can't have any contact with humans, and, you know, we're going to die. And others have been very different. But before the pandemic, they were very reasonable people. And I said, this isn't what's important now is to understand why people think differently and find the ways to bridge the gap instead of actually forcing the gap to open. And I think you've seen some of that in the U.S. and U.S. politics, where there's probably a lot more polarization that's going on, certainly on the political spectrum as a result of COVID-19. And so I think this is good, because everything we do now and how our portfolio companies reacted and how our CEOs reacted has been different, and they're all smart people. So this is an opportunity for us just to say, hey, we're all humans. Let's see what brings us together and binds us, as opposed to what separates us and forces us apart. So has there been changes in my life? I'm sure there has been. Am I afraid to take public transit? No, I'm not afraid to take public transit. And okay, maybe I'll wear a mask. I will wear a mask to be courteous, and I'll try to avoid lots of crowds. But 6 months from now, 12 months from now, when I think things have stabilized, we'll probably go back to what was somewhat normal before. And so I think overall, there hasn't been a lot of change.
Okay, well, I'm sure I will cross you in the subway. I've been riding the subway with my mask and my little Purell bottle. But,
all that stuff, yeah.
it has never been as quiet as it is right now, as you can imagine. So it's probably one of the safest places to be, actually. But thank you so much for taking the time and sharing your insight. That's wonderful. You're obviously extremely well versed in financial services, so it was very valuable to hear your thoughts.
Thank you, Peggy, and appreciate the time. And as you know, I'm wearing a shirt.
Oh, that's true. We didn't mention the shirt. Grenoble Olympic. Grenoble. Yes. Thank you for that. That was, and I'm wearing my obviously marinière. So thank you so much.
You're only missing the beret, Peggy. You're only missing the beret.
Next time. Thank you so much. Bye, Rob.
Bye-bye.
Bye.